What lies ahead for the economies of the Middle East? Joining us on INSEAD Knowledge today is Dr. Nasser Al-Saidi. He's the Chief Economist of the Dubai International Financial Center, and he's the former first Vice Governor of the Central Bank of Lebanon. Dr. Al-Saidi, thank you for joining us on INSEAD Knowledge. Let me start by asking you, we're seeing today turmoil that should bring about political modernization in both the Middle East and North Africa, but what kinds of financial reforms need to go along with that in order to totally modernize these areas?
We need to understand part of the reason why we're getting this requirement for transformation. The Middle East North Africa region during the 1990s did not become globalized. In other words, it did not benefit and did not integrate itself into the world economy or into international financial markets. So we missed out on that big wave of globalization during the 1990s. However, the period since the beginning of the second millennium has been one in which we've had relatively high growth in the main region, just about double what we had in the 1990s. The issue has been that there are a number of countries, well illustrated by Egypt, Tunisia, and many of the North African countries, is that although you had high growth and good performance, average 5.5%, 6% growth, and the issue with the growth is that it did not trickle down. It did not translate into improvements in incomes at lower levels. And therefore, we did not combat and deal with poverty. And therefore, what you need to do when you're thinking about the financial transformation that needs to take place is you need to do two things. First, you need to grow the region's financial markets. If you look at the financial structure in the Middle East, unlike the rest of the world, it is unbalanced. That is, the bulk of financing comes from the banking sector. Some 55, 60% comes from the banking sector. Another 30% comes from the equity markets, and the debt markets are severely underdeveloped. Now, that has some consequences in that particularly the debt markets are usually where you go for getting housing finance. And as a result of that, we have very little housing finance. And what that translates into is that young people are not able to get housing, or not able to get apartments, and therefore they cannot form families, and there are all sorts of socioeconomic consequences resulting from that. The second element of again, the financial transformation is that you need access to finance for both households as well as SMEs and young entrepreneurs. Take the case of Egypt. Only 10% of households actually have a bank account. But if you don't have a bank account, then all those services, financial services and banking services, are not available to you. It means you're not really integrated into the market economy. That's the bottom line. The same is true for SME finance. So I'm an advocate, for example, of developing second-tier markets for SMEs. We need those. Our equity markets are very much geared to the needs of big companies. So those are the two types of transformations.
Let me just follow up a little bit on what you said about financial markets. What is it going to take for the 7 Gulf bourses to achieve emerging market status?
Not being classified as emerging means you're classified as frontier. That means that you're viewed as relatively high risk, and therefore you don't attract institutional investors, because typically the mandate and directives of institutional investors forbid them from investing in what are called frontier markets. You take a emirate like Dubai, it effectively had Chinese growth rates. We had an average growth rate of 10.5%, 11% over 6-7 years. As a result, we haven't been able to attract what I call patient capital. That is capital that's here for the long term. You've attracted hedge funds and the like, but that's not really what we need. Typically, to be classified into emerging market status, you've got to have things like good financial reporting, but most important, things like delivery versus payment, DVP. In Nasdaq Dubai, the GIFC, we have that, but many of the bourses of the region don't have that, and therefore that's viewed as high risk. The second major requirement, and this is the main one actually, it's allowing foreign investors to have access to the markets. At the same time, the bourses themselves are relatively small. If you look at the total value of all Arab bourses put together, they're just about the size of Hong Kong. So the other thing that really needs to be done is to integrate the exchanges.
How do you see that happening? Mergers?
Oh, I think it's very much on the cards. I think it'll happen. The economics of it is such that today you've got economies of scale that you need to achieve that come from integrated trading platforms, having central securities depository, having electronic trading, and having free access. Those are very important, and I think the economics of it will force the integration, because freedom of movement of capital is an intrinsic part of the capital markets and of common markets.
You mentioned recently at the Jeddah Economic Forum the idea of a Marshall Plan for the region, a kind of a bank for reconstruction and development.
Many reasons for this. The first is that we're the only region in the world that actually doesn't have a reconstruction and development bank. Africa has the African Bank, Asia has the Asian Bank, Latin America has theirs. We're the only region in the world that doesn't have a bank that is dedicated to development financing, to financing infrastructure, that is looking at things like housing and others. So that's the reason why I wanted to call for it. The second reason is that apart from this lack of long-term financing related to development, there are also big discrepancies in terms of economic achievement across the countries of the region. We are a region that is very rich, but also very poor. We're very rich in terms of natural resources, but also financial resources. But we also have very poor countries in the region, countries like Morocco, Egypt, Sudan, and others. And therefore, over time, as we strive towards greater trade and economic integration across the region, we need to have an institution in there, a MENA region Bank for Reconstruction and Development, that can help address those discrepancies, the inequality across the region.
Are you getting any traction, and how are you moving this idea along?
It didn't come out of thin air. It comes from contacts that have been made with a number of institutions and countries across the region, but also the fact that both Europe, US, and supranational institutions such as the World Bank, IMF, see a strong need for long-term financing and development financing. So the region is lacking. And when we look at it, we find that the financial resources of the region are typically invested outside the region. So we gladly send our money and have been sending it to London, New York, Zurich, and elsewhere, whereas very little of it has come back. And that's the reason why DIFC was set up. And for the first time, really, we've set up through this financial city within Dubai. For the first time, we have the ability to manage and control our own financial wealth. That's extremely important. But the next bit is you need these types of large institutions that are going to be working with countries as well as the private sector to provide longer-term finance to address the needs of entrepreneurs, housing, development projects, infrastructure projects. The other thing that you actually need is, of course, many countries of the region have gone through violence and need reconstruction. So again, there's a big need, just like there was post-World War II in Europe and post-Berlin Wall, where you had to integrate Central and Eastern Europe. Now, certain countries in turmoil, and Egypt, Tunisia, might face problems. And that's why I think you're seeing a willingness on behalf of both the GCC community as well as the international community to want to intervene and support countries during this important transition period in their political transformation.
Oil prices have spiked as a result of the turmoil in the Middle East. What impact do you think that's going to have on the global economic recovery? Unless
you get oil prices at around 140, 150, I don't think you're going to have a deep impact in terms of world economic recovery. I would find it more worrisome what's happened in Japan, because that is saying something about the very safety of nuclear energy. And we've seen the reaction on a global basis now, all the way from China to the US to Europe, questioning the potential reliance on nuclear energy. What's needed to diversify the economy away from energy and construction? What you need is of course, to involve the private sector more deeply into the economy. The model of economic development for many of the countries of the region was for governments to play a dominant role in the economic development. But I think we're now over that, in that governments have been good at providing infrastructure. One of the best examples is Dubai itself and the UAE, whereby government built up the infrastructure. And it is first-class infrastructure. Now, what you need to do, though, is two things. You need to get your private sector involved, and therefore move government out of things like services and manufacturing. But you also need to do something major at the level of education. Economic diversification necessarily means a wide variety of skills. And therefore, what you need to do is to make major investments in education and in different types of education from what we've had so far. You need to go into science and technology. You need to go into quantitative sciences. We need many more scientists and engineers. We need the doctors to provide the health services. You don't create jobs in the oil sector. You create jobs in everything but the oil sector. So focusing on that will address both the needs of job creation, the needs of SMEs, but also will allow the economies of the region to go into services, more knowledge-oriented manufacturing and production.
So what would you say to business students today who may want to come here to live and work? What skills do they need to learn?
You need to be an international student and internationally mobile. You need the language skills. I think those are important. We tend to neglect them. The world moving forward is no longer going to be simply using English. So I would say get you and your kids starting to learn Mandarin as quickly as possible. But on the business side skills, yes, whoever lost a job in finance and banking can find a job over here. The reason why I mentioned that is that we are a capital exporter region. We need to manage and control our own wealth. And if you look at the scale of the financial wealth that is going to get created over the next 20 years in this region, even at an oil price of just 100 from now to 2030, we expect that the surplus generated by the GCC countries will be $37 trillion. That is an enormous amount of money that will require appropriate management. The other, I would have thought, is everything that is young population related, because it is young populations that we have. 60% of the population in the Gulf is below 25 years of age. That means that education is going to be high on the agenda, but health services are also going to be high on the agenda, as will all the new technologies, because the countries of the region, in order to diversify, will have to go into these new sectors. So that's where you can bring your skills.
I'd like you to look into your crystal ball and tell me what you see ahead for this region in the next 3 to 5 years.
This is a region which has enormous potential. We discussed the human potential, the financial resources, the natural resource wealth. But also, it is centrally located between Europe and Asia. And the linkages with Asia and the emerging markets are growing very rapidly on trade, on investment, across the board. And the cultural linkages, of course, are ancient. We are very, very old civilizations. We've been around not hundreds of years, but rather thousands of years. There's lots of energy in our young people, lots of energy in our entrepreneurs. So I think you'll see high growth rates. I think you'll see a much more integrated economy across the region, starting with the GCC itself. I think you'll see a common currency within the region, hopefully over the next 5 years. I think you'll see strongly integrated financial markets. At least that is certainly on my wish list. And I think you'll see much more integrated infrastructure. Power, water, pipelines, roads, telecommunications, I think will be much more strongly integrated. So I think this part of the world, the GCC, will be a major hub that will link all the African countries next to us to Asia and to Central Asia. The other thing that I think is very much on the horizon is the strong linkages with China. China, and people may not be aware of it, China is now extending its infrastructure, transport, pipelines, oil, that have now reached Kazakhstan. Within 5 to 10 years, Chinese roads and railroads will reach Turkey. That will mean that China will have the ability to send its goods by road and by rail all the way to Europe and to its consumers. And therefore, the economic geography of the world is being transformed. And what I think will happen in this part of the region is that it'll get integrated into the Chinese global supply chain. And we will integrate our infrastructure into that.
Thank you very much, Dr. Al-Saidi, for being with us today on INSEAD Knowledge.
Thank you.